A lot's going on within cryptocurrencies right now. We are seeing adoption ramp up. This asset class starting to go mainstream. And I think it feels like we are one big win away here. We got the SEC on the ropes. And if Coinbase can get this court case tossed, it's a tall order to get a judge just to toss the court case out. But if they can do that, man, we are going to bust these gates wide open. We're going to go through a lot of great stories here today. And part of that is going to be looking at the SEC and how we really do have them on the ropes here. And we could get a big victory here imminently. First story here, Bitcoin ETFs are stepping away from ideals of crypto, says blockchain execs. And they're absolutely right. The whole point of this endeavor, this technological revolution, is to free ourselves from the BlackRocks, the Fidelities, the JP Morgans, to free ourselves of their control. When we buy a Bitcoin ETF, they are holding our value, they control it. And so these Bitcoin execs or these crypto execs are absolutely correct. But this is the deal. They can own all the crypto they want. They can profit from it, but they can't control it. And as crypto enthusiasts that want to use crypto to do various tasks, we can use their volume, their investment capital against them to do our own tasks much easier. I still say, even for the crypto enthusiast, even if you don't use these projects and these investment vehicles, it's still going to be useful. Billions of dollars have flowed in the U.S. spot Bitcoin ETF. Some execs claim these instruments are a departure from crypto ideals. Trading activity showed that there's an enormous pent-up demand for these products. Experienced $10 billion in trading volume over the first 7 days. In addition, the Bitcoin ETF market saw over $782 million of net inflows of capital in just the first 2 days of trading. Massive demand there. Some executives at crypto companies are urging caution, claiming that ETFs may lead to a greater centralization in the crypto industry and will not be needed in the future anyway. I disagree on the second part of that this is not needed. Again, it's not appropriate for every investor to put their crypto keys on a Ledger Nano and stuff it under their pillow. An endowment fund, a pension fund, a major financial advisor. Like, they have to have ways to custody these assets, protect their clients' assets. And so this is going to be absolutely a big deal going forward. It's going to be a useful tool. And again, even though you may own crypto, the asset, you do not control the network, these decentralized networks, or their functionality in any way. Buy up all the crypto you want. We will use your own cash flows against you. That's the big deal. There is a world where if all the people entering the industry care about and think about is price and not what the technology actually does, well, they buy into these Bitcoin ETFs, and one day these Wall Street institutions will own 70% of the Bitcoin in circulation. I'm not sure that's the thing we are trying to build. Again, Satoshi's vision, David Schwartz's vision, Vitalik's vision, of course, was not to build a mechanism for institutions to enrich themselves. Yes, that's true. But what you're seeing here is not them taking over this space, but them bending the knee to the future, recognizing what we've been saying all along, that if you're going to be a player in the future, you're going to have to be involved in the crypto space. Crypto Biz, Coinbase versus SEC, case will determine crypto tokens' fate. This is a big one. And this is bigger than the Ripple case because it really affects the whole space. Every token out there that's trading on exchanges. Make no mistake, Ripple set the stage. They got that ruling. That assets like XRP, the asset itself is not a security, that it can trade on the secondary market. But that's a ruling for one token. And I think it gives people the playbook on how to attack these types of ridiculous court cases. But if Coinbase can win this, it's game over. The legal battle between the SEC and Coinbase is going to determine the fate of a number of crypto tokens in the US. That's what's key. Coinbase and the SEC faced off in court on January 17th to present arguments on whether the judge should dismiss or allow the case to continue. Now, if I'm predicting things, I'm going to say this is going to continue. It's too big, too important. And the judge isn't going to want to just toss the case out. He's going to want to let these two parties argue it out, present their evidence. I suspect it will go forward. But Coinbase's case is strong enough And the SEC is so wrong on so much of what they're saying, there's at least some chance this gets tossed. I don't think it's a high probability, but it could happen. And if it does, Gary Gensler is going to be in a whole heck of a lot of trouble. Right now, all he has is time. And if that happens, he loses that last asset. The case initiated by the SEC June 2023 against Coinbase is so far one of the biggest court battles within the crypto space, as the classification of 13 tokens is at stake. Some big ones too that they named as security crypto assets on there. No real reasoning why, no reason why any of these would be a security, and XRP, Bitcoin, Ethereum would not be. I don't think they're going to do well here. It's just about how long does it take us to get to that victory. During the hearing, Judge Falia, I believe is how you say her name, showed a deep understanding of the crypto industry, repeatedly pressing SEC attorneys to justify when and why the tokens should be considered securities. They don't really have a sound legal argument here, and I think that's the big issue. And we've seen it many times. They kind of make it up as they go along, so they can never get a firm footing here on what they're actually trying to say. Now, the judge understands her decision will reverberate across the industry, and during the hearing, she expressed concerns over constraining the SEC's authority. She doesn't want to do that, but also reservations over classifying a new technology that still lacks regulatory clarity from Congress. And I agree a lot with Gary Gensler, to be honest. I don't like his approach, because I think Congress does need to step in and address this issue. I don't think you should be able to go out there and wild west it and make all sorts of claims to investors and raise a bunch of money, and then it turns out, well, everything I said was a lie. We need to have some sort of reporting here, I feel, for your big crypto assets out here, your big projects. Just not so much even about your Ethereums or your XRPs and your really major tokens, but you have some really up-and-comers here where a lot of money comes in and you just don't know what you can rely on, and you haven't had that decade of success to really lean on. And I think in a lot of cases, still investors don't have everything they need to make certain decisions. You saw even in that Ripple court case, a lot of investors felt robbed. They thought that Brad Garlinghouse was hodling 100% of his stash along with them. I didn't think that, but a lot of people did. And I think investors, if they're on the wrong side of stuff, and many of them didn't understand the underlying metrics of a market, that's problematic. And maybe we should have something where if you're a key principle of a market, you should have to disclose these types of things, the type of sales you're doing, the reality of some of these partners, and if there's actually an economic underpinning to these partnerships, things like that, or is it just advertising? It's all sorts of stuff. It's not easy, but Congress should address this, and until they do, well, the SEC should just stay out of it. It's not their job to make up laws, and that's what's key here. A lot of these judges would love to rule for the SEC and have them govern this space, but you can't just make up your own laws. You have to have that done by Congress, and I think that's the key detail there. Grayscale, GBTC bleeding, drives down assets under management by $5 billion. This is a big problem. I don't know what Grayscale's thinking here. We see all of these ETFs roll out, and they were lucky enough to get in there with the first wave. And they had a lot of Bitcoin, a lot of people already investing with them. And they left that management fee at 1.5%. When you look at holding an asset long-term and the compounding effect of fees like that, you are going to lose before this game even starts. Grayscale is in a ton of trouble, and I don't know why they're leaving their fees so high, because they are going to lose everything. Why would you leave your money with Grayscale and just get murdered by fees when you could run over to Fidelity, ARC, any number of ETFs out there with the same product and much lower fees? BlackRock is going to eat them alive here. I don't know what they could possibly be thinking here. Heavy outflows and the decline in Bitcoin's price are driving down the value of GBTC's portfolio, despite solid demand for other Bitcoin ETFs. And that's the other problem here. Right now, it's maximum FOMO, maximum hype. People are excited about ETFs. What's going to happen 30 or 60 days from now when it's not all the rage? What's going to happen to this ETF? Well, you're not only going to have people that are flowing over to other ETFs, but you're just going to have people cashing out. It's going to be a nightmare for Grayscale. Outflows from the Grayscale Bitcoin Trust have intensified in the first days of trading, as a spot Bitcoin exchange traded fund contributed to nearly $5 billion decline in assets under management. Just a bad situation over there. They need to get under control, and they need to bring their fees down to match those other ETFs. Again, one person is going to win this market, and they're going to get most of the trading volume over the long term. This isn't something that you could, fix 10 years down the line. Like, you got to try to capture the market now. They had a huge competitive advantage. They've been doing this forever. They had a ton of assets under management, and they just snatched defeat out of the jaws of victory. Bitcoin instantly topped silver in ETF market and trails only gold among commodities. This is why it's laughable when a lot of people say, well, the ETF launch was a failure. Like, what kind of failure is that? This is huge. The newly launched Bitcoin exchange traded fund already having nearly $30 billion in assets under management. Silver's ETF only has $11 billion. Silver's a pretty big asset class. Again, much smaller than gold, but it's not minor. And when you're already at number 2, that's saying something. The only commodity that is more popular is gold, which Bitcoin is often called a digital version of. And gold roughly has $95 billion. So gold's sitting at $95 billion assets under management. Bitcoin's at 30. That's in striking distance, people. That's nothing. This is way beyond my short-term expectations, but it's a fantastic validation of Bitcoin's role as a reserve product and of the demand for Bitcoin exposure in financial markets, 21 Shares co-founder says. Absolutely, you couldn't hope for a better launch than this. Simon Dixon really laying it out here. We see the 2 largest commodity ETFs in the world are gold and Bitcoin. That's it. Gold holds about $96 billion and launched 21 years ago. Bitcoin holds $27.5 billion and launched 9 days ago. Gold has been a store of value for 5,000 years. Bitcoin has been a speculative store of value for 15. So that just tells you how early we are and how well crypto is performing. There's no doubt this is the future, and Bitcoin sooner or later is going to run down gold, especially in the ETF space. Best believe it. Wall Street and crypto. SEC Chair Gary Gensler's days may be numbered. I would have said this would be absolutely impossible only a year ago, but he has mishandled so much. He had easy wins. He could have dealt with Ripple, had a settlement, big payday, just close that sucker. He could have done the same with Coinbase, Binance. He just refuses to do so. And Brad Garlinghouse has stated, you keep doing the same thing over and over again and losing and getting pummeled, and you just hope that it's going to change. What kind of sense is that? We see a recent security breach at the U.S. SEC involves a false approval of a Bitcoin ETF, has drawn criticism towards Chairman Gary Gensler. That's another thing. It's just his attitude. As soon as they had to approve that Bitcoin ETF, he should have been cheering that on, saying, we had to wait till the market was mature and we had valid participants. He got that sucker across the finish line. Now, the truth is he did it because the courts forced his hand, but he didn't have to admit that. He could have, spun that in some sort of victory, but the guy refused to do so. He still wants to fight about it, say we shouldn't have this product. That's not his decision to make. These are commodities, and they can trade in ETFs, and there's nothing he can do about it. The courts are going to keep slamming this guy because he wants to make up his own rules. Gensler's reign, marked by stricter rules for crypto and stock markets, has attracted lawsuits and been called a political liability, which is exactly what he is. Because it's one thing if he's winning these cases and he's unpopular, but when he's just getting smoked and he's getting embarrassed in court, anyone that listens to these court hearings, it's bad. It's as bad as it gets. He's starting to become a big liability. Despite setbacks, including 2 lost cases that strikes at the heart of the SEC's crypto perspective, Gary Gensler may be chairman until 2026, so we'll have to see how this plays out. However, many on Wall Street believe that Gensler is being ambitious. At the outset of his tenure, Gensler promised to be stricter on crypto, stock markets, and climate change. Is climate change part of his authority? His quest has attracted lawsuits at the heart of the SEC's mandate to protect investors. Not very effective of that as of late. Gensler most recently signaled an intention to crack down on the use of AI now. So now he wants to go after AI. He said The concentration of power in a few hands will cause risk to society and the financial sector. However, he did admit that financial regulators would not have the power to oversee the industry. He may not have the authority, doesn't mean he might not try. This guy does not care about the rule of law or the authorities that have been granted to him by Congress. Crypto boss calls Gary Gensler a political liability. The CEO of Ripple, they have that printed wrong, Brad Garlinghouse, recently opined that Gary Gensler was a political liability. The SEC launched a case in 2020 against Ripple's sale of XRP, one of the top 5 cryptos by market capitalization. They did not have a sound, legal merit for that case, and it showed in court time and time again. And the guy should have saw, we're heading for a bruising, we're going to lose badly, it's going to affect everything, and he still refused to deal. Garlinghouse says it's insanity to keep doing the same thing repeatedly and expecting a different outcome. Gensler has taken many crypto companies and projects to task, but had lost 2 cases. And that's the big deal here. They always would tout, we're undefeated against crypto. But the only 2 that mattered to date, Ripple, Grayscale, they lost them both and lost badly. Ripple's case, in which a court ruled that retail sales of XRP were not unregistered securities. And in another case in which the judge ruled the SEC was wrong to deny a Bitcoin ETF based on market manipulation concerns, which have dealt Gary Gensler SEC 2 damaging blows. Public outcry about the agency's mischaracterization and intentions of another cryptocurrency company, Debtbox, is also marring Gensler's legacy. So that's where they said Debtbox is trying to transfer money overseas. There's no evidence they were doing that. There's no reason to say that. And they had Debtbox's, finances frozen. And it turned out they made it up. They just wanted to cause harm to a company. And if you or I did something like that in court, we'd be in so much trouble. This is absolutely outrageous. It's outrageous behavior by him. And it goes on further. The SEC chair may be forced to exit his position if Republicans win the 2024 election. So that's what we saw with Jay Clayton. His term went longer, but when President Trump lost, he had to step down. We may see the same thing this time around. And even if you have another term by President Biden, again, he's become a liability here. And even if he was trying to just execute the administration's vision for cryptocurrency, he still may have to go. That's something to remember here. He may not survive either way. Binance is going the same route as Coinbase. They're asking the courts to toss the SEC lawsuit. Now, they already settled with various agencies about money laundering, all sorts of stuff, paid $4 billion, but they're not conceding here because they'll probably win. Now, will they be able to get it tossed? Probably not. But they're fighting tooth and nail here. And this is an important one for Gary Gensler because, again, it's similar to the Coinbase case. He needs to try to get a win here and show he has some sort of authority over this space, some sort of backing for his claims, and I don't think he's going to get it in either of these court cases. And again, he can pretend for the next 2 years, possibly, if these don't get tossed, but that's about it. That's not a winning position. He's best to deal. And if I was him, I'd be trying to deal with Binance because they're on the ropes. They already settled, might as well settle this out. I'd try to get them to agree to some things. But the guy is such a megalomaniac, he just thinks he can win by attrition. Just keep going in there, making up whatever you want. You don't need the law. You don't need to worry about the rules. Just make up your own stuff. And so, unfortunately, this will probably be a long-term battle that we're going to have to win over time. We see Ripple lawyer slams SEC for making laughable legal arguments. Ripple's general counsel, Stuart Alderati, has once again taken aim at the SEC's stance on cryptocurrencies. Stuart Alderati criticizes the U.S. Securities and Exchange Commission's approach to digital assets. Alderati, referencing the landmark Howey case, argued that the SEC's current stance on crypto assets is so divergent from the establishment of law, it borders on absurd. And it really is. And court cases are telling them that. Now, in the Ripple case, they got those institutional sales, and they got them because those sales of that commodity were wrapped in contracts. So that was a different thing. But, the thing being sold is not securities, and no matter how many times they try to take this to court, they're going to lose. He came in response to a recent oral argument where the SEC compared investing in crypto assets to investing in an ecosystem of oranges. Again, this is nothing like investing in Howey's business, with contracts that gave you all sorts of rights and things like this. When you buy a crypto asset, when I buy a Bitcoin, when I buy an Ethereum, when I buy an XRP, it doesn't give me any rights. There's no contracts there. It is nothing like Howie. This is why they keep losing. The SEC stance is that crypto tokens are not merely collectible items, but rather keys to an underlying business enterprise, specifically the network or ecosystem they represent. Again, we don't have any of those rights, those contractual terms, either in writing, spoken, anything. There's nothing. You just get a commodity that you can use, like you could gold, like you could diamonds, like you could oil. That's all it is. And they will continue to lose. This is a big deal. Seems like we're at a precipice here. Let's hope this case gets tossed against Coinbase, or at least enough pressure is put on Gary Gensler where he finally has to settle. That's the key. If we can get a win, and we get a win now, I still say this is over. The floodgates are open. Bring on mass adoption. Because here in the U.S. at least, the SEC is a big, problem for us, because everyone is scared to jump in here and build interesting things and use this technology. Maybe it'll lower your costs. Maybe it'll make your payments faster. But you don't care because you don't want $1 billion lawsuit out of nowhere. We got to settle this issue. We are so close. It's just a matter of time. Does it happen now? Does it happen 2 years from now? The next administration? We don't know. We know we win. But at least we got a shot here to really win in a big way and do so quickly. And hopefully Gary Gensler realizes that. And I actually think if he would settle these lawsuits out, it will put us in a better space, because then we can have some agreed upon conduct, at least until Congress finally passes some laws. I'm not saying that we should not have, further requirements and reporting and things like that, but we can't just do it because we think it's right. They have to actually pass those laws to make it happen. Let me know what you think down below. And as always, please like, please subscribe. The revolution will be televised right here on Jungle Link.